Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we're going to be talking about some fantastic news for VeChain, what's going on with VeChain and VET and all that kind of stuff, and whether or not this is going to have an impact on price action. So as I get into this video, if you find it useful and informative, smash that like button. I really do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be able to be kept up to date with all of the updates that we do here for VeChain. And if you haven't yet joined us in Discord, guys, you are missing a trick. Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. It's the first place that we go to notify you of everything that is going on in the crypto space. So why not go ahead and check it out, linked in the description below. So let's go ahead and take a look at what's going on here with VeChain. So VeChain has recorded global adoption since its creation and is well positioned for continuous growth and usage across different parts of the world. VeChain's adoption in Hong Kong, one of China's most popular and culturally diverse regions, has notably accelerated over the last few years. In a recent tweet by the VeChain Foundation, they highlighted the growth levels and overall achievements that the network has seen since expanding to Hong Kong. As the tweet, which I'll bring up, let me see if I can find it. It's on one of my tabs. I think it's this one here. So this particular tweet right here. Okay, so basically in this tweet, the VeChain Foundation highlighted the growth levels and overall achievements of the network since expanding into Hong Kong. So as a result, VeChain has been carrying out network-related activities in the region for more than 5 years. During that time period, VeChain offered its services to a large number of enterprises in Hong Kong, which has in turn watered and nurtured the region's economy. So Hong Kong is becoming one of the most friendly to crypto and blockchain, or becoming more friendly to crypto and blockchain technology, creating a more favorable regulatory environment. VET has been operating commercially in the region since 2018 with a long track record for creating economic value for enterprises. Now, VeChain has also achieved a groundbreaking milestone. The tweet basically does reveal this in a little bit of detail, and as stated, there is 140 million transactions that have processed on the network for leading Fortune 500 operations. At this pace, VeChain is on its way to becoming one of the world's most revolutionary blockchains. Although regulatory policies remain, well, non-existent in most parts of the world, things on that is likely to change, or are likely to change in the longer term. So to quote the tweet here, to date, we've carried out over 140 million real-world transactions for Fortune 500 #1 operations, representing products on shelves, protecting, educating customers or consumers, and giving visibility throughout the life cycle of goods. VeChain equals the future of blockchain economy. Regulations are the final piece of the puzzle, and they're imminent. Hong Kong is becoming more friendly to crypto and blockchain, creating a more favorable regulatory environment. VET has been operating commercially in the region since 2018 with a long track record of creating economic value for enterprises. To date, they've carried out 140 million, as you can kind of see here on the tweet. So VeChain remains committed to building the foundations of what it refers to as the greatest digital revolution since the dawn of the internet. And that comes straight from their European headquarters, which, if you're not familiar, they have moved from Singapore and relocated their entire operation over to Europe. Okay, so it's important that we understand that it's not a China-based coin. That's never been the case, but to kind of really concrete that in, they've actually migrated all the way over as well to the European regions, just so they can kind of really concrete that in, and people can kind of put that FUD to one side now. It's also worth noting that VeChain stacks all of these achievements, and it does so while maintaining a sustainable path. In recent reports, VeChain was highlighted as one of the greenest blockchain technologies. VeChain maintains its eco-friendliness with its use of 2 coins to smooth the running of the ecosystem. This is VET, which is the cryptocurrency, and V4, which is used for the gas payments. Now, VeChain only accounts for about 4,459 kilograms in carbon emissions, which is pretty impressive. I think overall, the chain has, I think it's like 4.46 tons of CO2 a year, which is tiny in comparison to many of these other projects. So if we go into that in a little bit more detail, so although the chain has over 45 million transactions since its creation, it has seen a total number of active wallets crushing the 2 million. A single transaction only consumes an estimated 0.000216 kilowatts an hour, less than half the energy used by other blockchain technologies. So VeChain's core network, which hosts 101 authors nodes, only contributes, as I said, 4.46 tons of CO2 each year to the global carbon footprint. With the world moving towards a more sustainable path and holding space for greener firms at the global scale, VeChain is poised to have a very bright future. But what do you think? There's a lot of things going on in the world of fundamentals, and when we take a look at the technicals, we can see some pretty interesting things as well. But do you think this is exactly what the world needs? We need green technology like VeChain, servicing and providing services for the top 500 companies, and is basically the go-to enterprise level blockchain. If there's a business out there looking into blockchain technology, they are normally landing at the VeChain Foundation's doorstep, looking at VeChain for blockchain and looking to see whether or not that's going to fit their purposes. For the most part, it does. As many of you know, and if you do not know, I'll enlighten you now, VeChain is actually a layer 1 built using the Solidity language. It's actually quite easy to transition from the Ethereum chain to the the VeChain chain. Okay, and when you have VeChain and you have toolchain and you have all these other toolings, you're actually able to utilize this very efficiently. This is why you see a lot of enterprises onboarding onto VeChain, because it's so much slicker than that of using something like Ethereum. And you compound that down even further when you really start to think about the fact that it's actually predictable cost bases using the dual token approach to gas fees, right? You actually have predictable costs when it comes to your transactions, whereas on Ethereum you do not. So if you're already familiar with Ethereum and you're familiar with Solidity, and you have all those tools available on VeChain, and you have a predictable cost base, it seems to be the place to go to for enterprises, which is why you see such a global adoption happening at that business level for VeChain. But what about the price action? Does the price action give us that kind of hopium about price moving to the upside? And I think it absolutely does. There is, of course, a balance to be made between the supply and the demand when it comes to any kind of tokenomics. And we do have to consider the fact that there is a lot of supply when it comes to VeChain's VET token, which is the cryptocurrency. So when we think about this, there's going to have to be an imbalance in that supply and demand if we want to see price moving upwards. And in order for that to really occur, we need to see more adoption. And I think everything I've just spoken about is really going to be helping towards that level of adoption. With a certain amount of adoption, we can see the supply shrinking, and that's really what you need to create that imbalance in order to push that price up higher. Which is typically why you see price moving up in a bullish market. It's because there's a lot of demand, and whilst that demand is coming in, it's soaking up some of that supply. Now, we saw very significant gains when it came to VeChain over the 2020-2021 highs. In fact, it was 17,000%. To put that into context, Bitcoin moved 2,000%, and I think Ethereum moved around 4,000, 5,000%. I can't remember the exact numbers off the top of my head. Now, there were some other winners out there that moved significantly further. Take Polygon's Matic, for example, which moved over 43,000%, and Cardano's ADA, I believe, was 28,000%. But we cannot forget 17,000% returns on your investment are very, very significant, and I don't think we're done just yet. Whilst we had seen 17,000% in gains, this was actually during a weaker time than we currently find ourselves in. This is back when there wasn't even a stablecoin on the VeChain ecosystem, and now we have VUSD. That does usher in the whole landscape for DeFi on the VeChain blockchain. Not only that, we also see a thriving NFT marketplace as well on the VeChain ecosystem. This is massive milestones ahead of where we were previously. So I don't think it's hard pushed to think about progression to the upside and seeing a potential another 17,000% or even more in the future for VeChain. Like we said in the article, right, and kind of during this presentation, that we've kind of been seeing a lot of growth for VeChain over the last few years, and I don't think it's going to be slowing down. There is a need for this technology, and there's a need for it to be incredibly green, and VeChain really does fit into that very, very well. So price prediction wise, and where I think things are going over the next few years, I think it's going to be very significant. We can see on this particular chart right here that we do have a pretty large green gap down here. This is a discounted range. If price comes down into this range, you kind of want to be dollar cost averaging into positions, in my opinion. But do bear in mind, I'm not a financial advisor. I cannot give you financial advice. All I can do is give you my thoughts and opinions on what I think to do in these circumstances. So basically 1.5 cent or lower seems to be pretty good DCA areas. I'm going to briefly just take a bit of a stab in the dark here and say we'll probably come down towards this kind of 1.5 to 1.4. I'm going to put it on the slightly lower side at about 1.4, just because it's going to lower our price prediction, so it gives it a little bit more conservative approach to it, which does mean that we have to come down a little bit lower. But you can also see that we're getting rejected not only on the 50 EMA but also the 200 EMA here, so it's a high probability that we do have to move on down. Now, with that being said, we can see that there is this interesting growth range. Okay, so we can see that over the next few years, there could be a potential move up into this area just here. Now, there's going to have to be many different things that would create an amount of imbalance in the supply and the demand to do this. However, you can see on the map a 1-to-1 to 1.236 Fibonacci extension level from 1.402 cent would put us at about $2.49 to $8.46, which I would not mind. I would not mind that at all. To be fair, though, it's going to be a hard challenge to push up into those ranges. So it's more important to be reflecting on some of these key levels that are slightly below that. Specifically for me, I think we've got to really focus in on the 0.789 or 786 area, down here at about 79 cent. I do think that's going to be an interesting zone for us, and I think there's going to be some resistance around there. But if we were to close above the 786, then that really does mean that we can push up into these slightly higher ranges. So we're going to be watching this from a psychological point of view as these fib numbers start to resonate with people as price starts to push on up. But we do need to see a lot more DeFi on the ecosystem, which I'm hoping that with VUSD launching, we're going to see a lot more total value locked, which means we might see a supply shrinkage just from lockups and liquidity pooling and all these kind of things that are going on. And that might actually be a fantastic catalyst to see that when demand comes in, the price does jump up into those significant heights. It's also worth noting that the more onboarding that occurs for these enterprises could actually help in shrinking the supply of VET. And the reason for this is that when you hold VET, you actually earn V4, and you need V4 for the transactions for blockchain technology, or V4 or the VeChain for blockchain. So if you're incentivizing people to make it as cost neutral as possible, what you're going to do is you're going to hold a lot of VET in order to earn the V4 so that you can use the V4 for your transactions on chain and so forth. So there's an incentive here for large enterprises to actually hold a lot of VET, which could also help shrink the supply. So over a long period of time, as we see more and more adoption for VeChain, I think the price is going to be moving quite steadily to the upside. But that's my personal thoughts and opinions on it. What are yours? Let me know in the comments down below. I'm going to leave this video right there. If you did find it useful and informative, smash that like button. I really do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done, out of the way though, guys, I hope everyone has a fantastic day, and I'll catch you all in the next one.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.